Most traders spend years hunting for an edge, new indicators, new strategies, new mentors, convinced the secret is somewhere out there. It isn't. Research from over 3 decades of working with elite hedge fund managers and professional traders reveals something most of the industry won't tell you. The traders who make it aren't defined by what they learned. They're defined by who they already were. The best performers didn't rewire their personalities to fit the markets. They traded from their personalities, their curiosity, their discipline, their pattern recognition, qualities they'd already sharpened in some other arena long before they saw a chart. By the end of this video, you'll understand exactly how to identify the specific strengths you've built throughout your life and systematically translate them into a trading process that actually fits you, not someone else's system retrofitted onto you. Because the trader who tries to become someone else will always lose to the trader who's mastered becoming themselves. Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Let's start with the one thing nobody in the trading industry wants to admit, because it makes half their products irrelevant. Your edge is not in the next strategy you buy. It's not in the indicator someone sold you on Twitter. It's not in mimicking how some trader in a YouTube video manages their positions. Your edge, the one that will actually compound over years, is already inside you. It's in the way you think. Yeah, the way you process information, the way you've been wiring your brain since long before you ever heard the words bid and ask. Here's what the research actually shows. When psychologist Dr. Brett Steenbarger assessed the signature strengths of some of the most successful hedge fund managers in the world, people managing serious money, the top traits that came up again and again were not discipline born from willpower. They were not fearlessness. They were intellectual curiosity, self-regulation, and entrepreneurialism. In other words, these traders weren't grinding against their personalities to perform. They were performing because of their personalities. Now sit with that for a second. Because most of the trading education space is built on the opposite assumption. The assumption that you come in as a blank slate, you absorb a system, and then you execute that system. But a system is just a set of behaviors. And if those behaviors are fundamentally misaligned with how you're wired, you're going to fight them every single day. And eventually, under pressure, under drawdown, under the kind of stress that the market delivers without warning, you're going to revert. Not because you're weak, because you're human. Think about it this way. A trader who is naturally a rapid pattern recognizer, someone who played competitive video games, someone who grew up processing multiple streams of information simultaneously, that trader trying to force themselves into a slow, thesis-driven macro investing style is like taking a sprinter and telling them their future is in marathon running. They might finish the race, but they'll never win it. One of the traders Dr. and Steenbarger worked with, a man who went on to be featured in Jack Schwager's Market Wizards series, had an unusual early edge. Even as a developing trader, he could hold open more screens and process more data simultaneously than almost anyone around him. Where did that come from? Gaming. He had spent years training his brain to recognize patterns fast, across multiple inputs, and respond. That wasn't a skill he learned in a trading course. That was a talent he already had. Trading just became the arena where it paid off. So the first thing you need to do, before you touch another strategy, before you read another chart, is answer this question honestly. What have you done greatly in your life outside of trading? Not what you're decent at. What have you done greatly? Because buried inside that answer is a clue to the kind of trader you were built to become. Are you someone who's always been analytically obsessed, who goes deep on problems, who doesn't move until they fully understand something? That's probably an investor's brain. A position trader's brain. Someone who should be doing deep research, building conviction over time, not staring at a 2-minute chart trying to scalp 10 ticks. Are you someone who thrives in fast, high-stimulus environments? Who makes fast, accurate decisions under pressure? Who reads rooms, reads energy, reads momentum? That might be a short-term trader. Someone who was built for tape reading, for order flow, for intraday setups. The point is, the market doesn't care about your strategy. It will exploit whatever misalignment exists between who you are and how you're trading. So stop trying to be the trader the YouTube thumbnail told you to be. Start figuring out who you already are. And then build a process around that person. Now here's where most traders make their first catastrophic mistake in the psychology department. When things go wrong, and they will go wrong, they reach for a journal. They sit down, they write out everything they did wrong, every mistake, every missed exit, every oversized position. They fill pages with self-criticism, close the journal, and wake up the next morning planning to do better. And then they do the exact same thing again. Here's why that doesn't work. Rational reflection. Reading your own writing back to yourself, nodding along, making mental notes, does almost nothing to change deep behavioral patterns. The research on this is clear. What actually catalyzes change isn't logic. It's emotional arousal. You need to feel something strongly enough that your nervous system registers. This needs to change. Not this should probably change. This has to change. Think about the most significant behavioral shifts you've ever seen in your own life or the lives of people around you. They almost never happen gradually through careful contemplation. They happen at a breaking point, a moment where the pain or the conviction becomes impossible to ignore. Paul Tudor Jones, one of the most successful traders of all time, lost 3/4 of his money when he was young. He didn't just decide to be more disciplined. He hit a bottom so painful that his entire relationship with risk was rebuilt from the ground up. Everything that made him great came after that restructuring. You don't need to blow up your account to get there, but you do need an approach to your own negative self-talk that actually has teeth. Here's a technique, sometimes called FU therapy, that sounds strange until you try it, and it works. When you notice the internal voice that tells you you're not good enough, that you'll never be a consistent trader, that you always do this, that you always make the same mistake, don't try to logically argue with it. Don't try to replace it with a positive affirmation. Instead, imagine that voice is not yours. Imagine it belongs to someone you genuinely dislike, someone whose opinion you'd find offensive, someone who'd love to see you fail. And now hear them saying those things to you. Something shifts immediately. What was a passive internal monologue becomes an external attack you can respond to. And your response isn't a gentle reframe, it's a hard rejection. The anger that comes up, that's not something to suppress. That's the emotional catalyst that actually snaps the pattern. Used consistently, this is how you build a neural pathway that doesn't collapse the first time the market tests you. This is not about becoming an emotional trader. It's about using emotion to architect your psychology and then operating from a place of trained composure. The surgeon analogy is worth thinking about here. Surgeons don't panic mid-operation. Not because they don't care about outcomes, because the training has been so deep, so repeated, so supervised, that the procedure becomes second nature. They don't go on tilt because there's nothing for tilt to grab onto. The competence is just there. That's what you're building toward. Which brings us to something that almost every trader underestimates. You're not going to get there through insight alone. You're going to get there through repetition. Specifically, through deliberate, tracked, conscious repetition of a single behavioral change until it is no longer a change. It's just how you trade. Before we go further, if this kind of thinking is landing for you, if this feels different from what you usually hear about trading psychology, take 5 seconds and subscribe to Trader's Bible. Hit the like button and turn on notifications. Every video we release is built the same way. No hype, no recycled wisdom, no motivation dressed up as education. Just the research, the frameworks, and the honest truth about what actually makes traders last. Back to it. Here's a rule worth committing to memory. 90 for 90. 90 days of the same deliberate behavior, without exception. This comes from the AA model. 90 meetings in 90 days, and the principle is the same. You don't change a pattern by addressing it occasionally. You change it by showing up to it every single day, until it stops being a pattern you're fighting and becomes a pattern you've absorbed. Pick one thing, just one. Maybe it's how you size your entries. Maybe it's the way you stage your exits, taking a third off here, a third there, letting the last piece run. Maybe it's the rule you keep breaking in the first 30 minutes of the session. Whatever it is, one thing. And put it in your journal every single day for 90 consecutive days. Not sometimes. Not on the days you remember. Every day. And watch what happens around day 45, day 60. You stop wrestling with it. It stops requiring willpower. It becomes part of your process, the way breathing is part of your morning. This is the reason most trading education doesn't work long-term. People consume the concept. They agree with it intellectually. They apply it for a week or two. It feels hard. They get distracted by a new idea, and the old pattern reasserts itself. Change without repetition is just inspiration. And inspiration has a shelf life of about 72 hours. Now let's talk about something that gets treated as optional when it's actually structural. Your trading psychology is not just built at your desk. It's built in everything else you do. And this is the piece that traders, especially developing traders, almost universally neglect. Psychologist Martin Seligman's PERMA model breaks down the components of genuine human well-being: positive emotions, engagement, relationships, meaning, and accomplishment. When a trader's entire identity collapses into their P&L, every single one of these categories gets funneled through a single, volatile, uncontrollable variable. A drawdown doesn't just hurt their account. It destabilizes their sense of engagement, their meaning, their accomplishment, their relationships, everything. And a person in that state doesn't see markets more clearly. They see them through a lens of anxiety and desperation. And here's what the research from Barbara Fredrickson shows that most people in this industry will never discuss with you. When you are in a genuine state of well-being, not manufactured positivity, not affirmations, actual well-being, your brain's perceptual capacity expands. You literally see more. You notice more patterns, more opportunities, more nuance. A trader who goes home to a life they find meaningful and returns to the screen the next morning with energy has a measurable cognitive advantage over the trader who's been staring at charts for 14 hours, trying to will their way back to break even. This isn't a soft suggestion. This is performance science, and the practical application is straightforward. If something is not in your calendar, it is not part of your process. Schedule exercise like you schedule your pre-market prep. I schedule time with people who matter like you schedule your end-of-day review. Not because it makes you feel good, although it does, but because it makes you a more perceptive, more regulated, higher-performing decision maker during market hours. You are not two separate people, the trader and the person outside of trading. You're one person, and the quality of that person's life determines the quality of that person's decisions. Think about it. From the perspective of risk, a good portfolio manager doesn't put everything into one position. They diversify their exposure so that no single drawdown collapses the whole structure. Your life is the portfolio. If trading is the only position, if P&L is the only thing that matters, you are running maximum concentration risk on the most volatile asset imaginable. You diversify your life the way you would diversify your book, not as a hobby, as a professional discipline. And finally, the last piece, and the one that challenges the most deeply held belief in independent trading culture. The belief that the lone trader, grinding away in isolation, is somehow more pure, more disciplined, more serious than someone who operates within a community. That isolation is a sign of focus. It isn't. It's a liability. Think about world-class performance in any domain, not just markets. A concert pianist who only ever practices alone, who never plays in front of others, who never receives feedback from someone further along than they are. That person does not become world-class. A surgeon learns in a team. Every major medical training program is built on the principle of each one teaching one. Everyone learns. Everyone teaches. Everyone shares. The visibility of others doing things correctly is itself a form of training. It wires the brain toward the right patterns. In professional trading firms, the development of traders is measured in months and years of observed, supervised repetition. Not days, not weeks. And the traders who come out of that environment don't go on tilt the way isolated retail traders do. Not because they have better strategies, but because the patterns of good process are so deeply embedded through repetition and community that there's nothing for the tilt to disrupt. The competence is just there. The objection people raise here is, I don't have access to a prop firm. I can't sit in a room full of professional traders. That's fair. But it doesn't mean the principle doesn't apply to you. It means you need to build what you don't have access to. Find 2 or 3 traders at a similar level or slightly beyond you. Commit to a regular cadence of sharing ideas, reviewing trades, discussing what worked and what didn't, not casually, systematically. Every person in that group is compounding their learning 6 times faster than they would alone because they're absorbing lessons from 6 people's experience, not 1. This is the model that makes elite performance possible. Not the genius working alone in a dark room. That's a myth. That's the story we tell ourselves to explain why we're still isolated. The truth is that every high performer you've ever admired, in sports, in business, in markets, had people around them who made them better. The question is not whether you need that. You do. The question is whether you're going to go build it. Because here's the thing about all 5 of these principles: the signature strength mirror, the FU therapy, the confidence compounder, the 90 for 90 rule, the PERMA plus approach, and the virtual team. They are not 5 separate ideas. They are one idea expressed across 5 different domains. And the idea is this: the trader who compounds is not the trader who bought the best system. It's the trader who became the most effective version of themselves. That's a psychology project, a life architecture project, and a community project. All 3 running simultaneously. Most people watching this will nod along and change nothing, because insight without structure evaporates. So if you're serious, pick one of these 5 frameworks. Just one, not all 5. Pick the one that felt most uncomfortable when you heard it, because that's usually the one with the most leverage, and apply it with the same rigor you'd apply to a trading rule. Every day, without exception, for 90 days. Most traders study their losses obsessively, but the real compounding happens when you reverse engineer what you did right. And here's the part that will feel wrong at first. When you sit down at the end of a losing day, and losing days are coming, that's not pessimism, that's the job. Your instinct is going to be to go straight to the wound, to pull up every bad decision, every exit you fumbled, every position you held too long or cut too early. And that review feels productive. It feels like accountability. It feels like the serious thing to do. It isn't. Or rather, it isn't enough. And done without balance. It's quietly destroying the one thing you actually need to trade well over a long career: confidence grounded in evidence. Here's the distinction that changes everything. There is a difference between studying your losses and only studying your losses. The first is necessary. The second is a slow, methodical erosion of your belief in your own process. And you won't even notice it happening because it disguises itself as discipline. Think about how you'd raise a child. If every time your child came home from school you focused exclusively on what they got wrong, what they missed, where they fell short, and you did that consistently day after day, month after month, how does that child develop? Not with confidence, not with the kind of grounded self-belief that allows someone to take intelligent risks. They develop with a hypervigilance around failure that makes them timid exactly when boldness is required. Your trading journal is doing that to you right now, and you don't even know it. The fix is not to stop reviewing your mistakes. The fix is to make the review of your best decisions equally systematic and equally serious. Not as a reward, not as a feel-good exercise, as a technical study. Because your best trades contain the blueprint of your actual edge. They show you, specifically concretely in your own data, what you look like when you're operating correctly. And if you never study that, you have no reference point to return to when things go sideways. Here's the format. Simple enough to sustain, powerful enough to compound. At the end of every session, you answer 2 questions. 1. What is one thing I did well today? And precisely how did I do it? Not just, I was disciplined. That's too vague to replicate. Get specific. I waited for the level to be tested twice before entering, and I sized at 60% of my normal position because the setup wasn't clean. That's something you can repeat. That's something you can build on. 2. What is one thing I didn't do well today? And what is the single corrective action I'm committing to tomorrow? One thing, not 10, not a full autopsy. One thing you did well, examined in enough detail that you could teach it to someone else. One thing you didn't do well with one specific correction. That's it. That's the whole journal entry on the difficult days. The reason this works is compounding. Every day you do this, you are depositing something into two accounts simultaneously. Your confidence account, the accumulated evidence that you are capable of doing this correctly, and your correction account, the slow, deliberate removal of one flaw at a time. Both accounts grow, and they grow at the same time, which means you are never in a position where all you have is a list of things you're doing wrong with nothing to counterbalance it. Now imagine you're doing this inside a group. 3, 4, 5 traders who all commit to the same daily practice and share the results with each other. Now you're not just learning from your own best decisions. You're learning from everyone's. Every person in that group is getting a window into 5 different expressions of good process. 5 different ways that disciplined trading shows up in real time, across real markets, in real accounts. Yeah, the compounding doesn't just continue, it multiplies. This is what separates the traders who last from the ones who don't. It's not the strategy, it's not the risk management system, though that matters too. It's the internal architecture, the way they relate to their own performance, the degree to which they've built a practice of learning from strength rather than only from failure. And the quiet irony is that the traders who study their best decisions most carefully are also the ones who handle their worst days with the most composure. Because they have evidence. They've documented in their own handwriting, in their own words, exactly what they look like when they're doing it right. And on the days when nothing is working, they can go back to that. Not as motivation, as a technical reference. This is my process. This is what it looks like. I've done it before. I'll do it again. That's not confidence built on hope. That's confidence built on data. And data doesn't evaporate when the market goes against you. You clicked on this video probably thinking it was going to be about trading, about markets, about some framework for reading price action more accurately or managing risk more systematically. And in a sense it was. But not in the way you expected. Because everything we covered today, the signature strengths, the emotional pattern interrupts, the reverse engineered journal, the 90-day cementation rule, the life outside your P&L, the community you haven't built yet. None of it is really about the market. It's about the person sitting in front of it. The market is just a mirror, and what it reflects back at you is not your strategy. It's your psychology, your habits, your relationship with uncertainty, your capacity to act from a place of genuine competence rather than anxiety, dressed up as confidence. Here's what you now understand that most traders will go their entire career without fully grasping. The work is not out there. It was never out there. The edge you've been searching for in courses, in indicators, in other people's trade ideas. It was always an inside job. What you've done greatly in your life before, trading is not irrelevant context. It is the foundation. Your curiosity, your discipline, your pattern recognition, your ability to read people or systems or momentum. Those are not soft qualities. They are your actual competitive advantage, waiting to be applied with the same rigor you'd apply to any technical skill. The trader who finally understands this stops shopping. They stop consuming. They start building, deliberately, quietly over time. a process that is an honest expression of who they are. And that process, compounded across months and years of structured reflection and deliberate repetition, becomes something no one can replicate. Because it was never replicable. It was always yours. So before you open your platform tomorrow, before you look at a single chart or check a single position, take 10 minutes. Ask yourself honestly, how am I trading? And more importantly, does the way I trade reflect who I actually am at my best? Not who I'm trying to become. Not who some trader I follow seems to be. Who you are. Right now. At your best. If the answer is yes, build on it. If the answer is no, that's not a problem. That's information. And now you know what to do with it. That's Trader's Bible. We'll see you in the next one.